Hello, AdviceTech.LIVE. A sincere welcome to my esteemed guests and industry friends. My name is Cheryl Nash, and I'm currently the president of APL at InvestCloud, and I'm also a proud board member at AssetMap. I'm really excited to spend this time with you today. During my long career in wealth management, I've had the pleasure and opportunity to work with each of the firms represented on this panel and leaders in the investment community, and I'm proud to call my friends. The vision of this panel was to help the AdviceTech.LIVE community get a unique glimpse into three of the firms that are shaping the experiences of thousands of advisors and millions of customers. I can't say that I've had the opportunity myself to get three of the largest investment platforms on the same stage, and I'm really excited to hear how each of you is approaching this fast-changing industry. Our hope is that each of you will share insights into how our audience can take away ideas and actions for their own practices. I encourage the audience to engage with the speakers, and if you can relate to what you hear, please share your response through the emojis available on your screen. Our plan is to spend the next 55 minutes addressing 5 topics that were sourced from our community for this panel. So let's get started. First off, we want to thank you each for investing in our shared community and taking the time personally to share your insights and vision of the investment advice profession. To start, let's get to know our guests. I'd like to start with Dave.
Well, thank you, Cheryl. I appreciate that, and happy to be here with Michael and Michael, two of my old friends and colleagues from many years in the industry. So this is going to be fun. So I'm Dave Butler. I'm the co-CEO at Dimensional Fund Advisors. Hopefully the audience has heard that name, Dimensional, before. We're about a $790 billion asset manager. We've been in business since 1981, so about 43 years, working with large institutions around the world. And in 1989, we actually started working with financial advisors. So we've been in the advice business for about 35 years now. I grew up in that space. My first role at Dimensional was a regional director working with advisors throughout the country. So we're very, very pleased by the growth of that business. We're well over $500 billion now with financial advisors. And really what we've looked at as our role in that kind of collaboration is to be capital market experts. So our expectation is that we're leading with innovation and concepts and ideas on the capital market side. We think the advisor is the expert in the client side. We think the combination of those two then lead to this great client experience. So our 35 years with the advisor business has been just that, trying to support advisors and delivering a great client experience. I think we've done a good job of that. We've built up a number of really, really terrific communities of great size that we hope to continue to collaborate well with over the years. And I think Michael Kim had mentioned this in one of our pre-discussions, but a lot of dialogue, a lot of back and forth. And what we really try to do is collaborate with the advisors to react to what they want and what they need to deliver on the great client experience. So really happy to be here and excited for the chat.
Dave, I think client experience is key, right? If you have to get that right, and then everything else falls into place. So I appreciate that. So next, Michael Kim, if you don't mind introducing yourself and AssetMark.
Yeah. Thank you, Cheryl, and I appreciate the introduction. And first of all, a big thank you to Adam Holt and the AssetMap community for this opportunity to participate in this great panel here. And as Dave mentioned, it's super exciting to be here with old, longtime industry friends. And so, sure, I'm really excited about this session here and looking forward to our conversation. Just by way of background, President and CEO of AssetMark. I've been with the firm for over 14 years now and held a number of different leadership responsibilities. We at AssetMark, we oversee over $130 billion in assets on behalf of over 10,000 independent financial advisors, whether the advisors are affiliated with broker-dealers or hybrid RIAs or fee-only RIAs. Our mission is to really support the total growth aspect for independent financial advisors. And the way we do that is really focusing on our curated investment platform, making sure that our advisors have access to what we believe are the best investment strategies in the industry. And number two, really a fresh digital experience. I totally agree with Dave's point about the client experience being at the center of it. And we absolutely believe that digital platforms are enablers and big catalysts for that unique client experience. And at the end of the day, we're also a big believer in that we're all in a service industry and a relationship industry. And so one of the key areas that we focus quite a bit on is to deliver what we believe is the industry's best service and operational experience, and that proverbial easy button experience here at AssetMark. And sure, we'll get into a lot more details later on in that. But really, at the end of the day, our overall mission is to help our advisors grow. And we have a number of exciting initiatives that we are working on that we'll get into a lot more details here. But super excited to be here on this panel, Cheryl, and we'll turn it back over to you.
Great. Thank you, Michael. And last but not least, Michael Lane from SCI, talk about yourself and your firm.
Great. Thank you very much, Cheryl. Michael Lane, I had joined SEI 2 months ago. And for those not familiar with SEI, SEI has been around for 56 years, long reputation in both the technology, operations and administration, and of course, investment management. We manage from an AUM perspective about 500 billion, or 493 last I looked, $493 billion of assets under management. We have approximately somewhere in the ballpark of 1.6 trillion of assets under administration. And if you look at our banking business, we use our wealth platform. Our wealth platform is used by approximately it's about $6 trillion worth of wealth platform in the bank space. So we are a multifaceted business, and as both Dave and Michael were saying, longtime friends. In fact, Dave Butler and I worked together closely for about 25 years. 14, I worked at Dimensional before joining BlackRock, and then joined SEI just a couple months ago. My role at SEI is I lead our asset management business. Asset management business at SEI includes all of our investment businesses globally, as well as our institutional distribution business and our institutional clients and our advisory clients. Our focus for the advisor clients is to create an ecosystem that can be end-to-end, from the custody business to the technology and the wealth platform, investment management, whether that be through models or individual solutions, as well as I think we're somewhat rare in the industry that not only do we encompass all of those different types of solutions from technology through investments, but we also have an alternatives platform, which makes it easier to access the alternatives segment of the industry as well, and that's called Access under the SEI brand. So that's a SEI in a nutshell, and thrilled to be here, Cheryl, and thrilled to be here with my friends Michael and Dave.
Great. Well, welcome to SCI, Michael. That's quite a firm to join. So just let me go on to our next question. So it was great to get to know our panelists, 3 amazing panelists from 3 amazing firms. So each of you operates an asset management platform and yet have evolved to support the evolving financial planning and advisory professionals. What are some notable specific ways that you're actually supporting the advice delivery process? Love to get some examples from you, how you're solving pain points for advisors. What are you actually doing for them? What are you investing in? What does that look like for your firm? So let's start with you. We'll go the other way. Let's start with you, Michael Lane.
Okay, thank you. So if you spend any time with advisors, particularly in the RIA space or in the independent broker-dealer space, and that could include even within the bank space, particularly in regional banks, one of the things that you hear most often that is a pain point is actually the tech stack, which is what we're here kind of talking about with advisor tech. That is one of the biggest challenges. It can be very cumbersome, clunky, because you have all these different component pieces that you're trying to pair together, and it doesn't always work really well. And so that's probably, if I were to say on the as a first line of where we're really focusing, is how do we improve and create an ecosystem that is seamless for somebody, whether it be an independent financial advisor at an independent broker-dealer or an RIA. That's really a core focus where there is a need for that. There is not a unified ecosystem for many of the people that are financial advisors in that space. And if you can create an ecosystem where it makes it much easier to hold custody, to have a tech platform to help you build portfolios for clients, and then actually help on the back end of the investment management, that frees up time. And at the end of the day, we hear a lot about AI, we hear a lot about innovation, we hear a lot about how we're going to continue to see these huge advancements in AI, and I even asked a question of one of the AI innovators recently, how long before the advice that you would get from any financial advisor might look the same, because everybody's going to be using an AI-driven platform. And the answer was 2 to 7 years. And so what becomes really important when you hear information like that can seem really scary, because people are going to look more and more alike in terms of the advice they're providing to the end investor, is the relationship side. To Dave's point and to Michael's point, like what they're talking about as well, is relationships are so important. That's about the only thing that won't be AI'd. And so that's our focus, is when you think about pain points, you have to create and free up more time so that people have the ability to spend more time on what is the one thing that is going to be a differentiator in the future, 7 to whatever years out we look at. So that's our focus. Our focus is increase time, spend more time with clients, build better relationships, understand that the only place where personalization happens is in between the advisor and the end investor.
I love that. I think thinking through that, and you look at Cerulli and they say that the single platform or better integration against different platforms, to your point, right? The whole ecosystem, which makes it so hard for advisors, and AI comes into play there. And then obviously what's most important is the relationship. So love that, Michael. That was great. So Michael Kim, same question. What are you thinking there?
Yeah. I mean, I think Michael Lane is absolutely right about the importance of the relationships, and that is something that will never be commoditized. In addition to that, one of the other things that we look at is what are some of the large secular trends in the industry that's shaping kind of the delivery of advice. And Cheryl, what's interesting is in the past, financial advisors used to really tout their ability to manage portfolios and pick different securities as part of their overall value proposition. But what's happening is really the clients are expecting much more of a holistic engagement. And again, to the point of client experience and the importance of experience, what the clients are expecting from their advisors is really a full service planning experience. And what we mean by that is, and really the conversations that we're having and some of the areas that we're investing in, is how do we help that advisor become a full service wealth advisor, wealth counselor to not just the individual, but to the entire family. And so the areas that we're focused on are things like tax management and really advanced planning desk, and even some of the business outsourcing capabilities. So tax management to start, I mean, we all know that taxes is one of the key areas that all financial advisors focus on. What if there was actually a tax overlay strategy that wasn't as complicated as some of the really kind of the direct indexing and some quant-based approach, but a simple, easy to understand tax overlay that generates a meaningful tax alpha that can almost cover the financial advisor's fee, and across mutual funds, ETFs, individual securities, and really across the entire UMA of different sleeves. And so our tax management services is actually one of the most popular areas that not only we've launched recently, but really the feedback that we're getting from clients has been super overwhelming, just in terms of their desire to enroll their clients in the tax management services and really bring that tax alpha value to their clients. Advanced planning desk is another area where, in order for the advisors to compete with the wires or maybe even the private banks, they absolutely need to have access to experts that are versed in estate planning, tax planning, business exit advisory, philanthropy, et cetera. And so that's another example where we are absolutely in the process of building out these full service capabilities to help the advisors really target not only higher net worth clients, but really compete more really at the multifamily office level. And we're seeing a tremendous amount of success. Last thing I'll mention is maybe as a follow-up on Michael Lane's comment about really freeing up the time for the advisors. What if there were services that where the advisors can outsource the CIO, the investment, the CIO services, the paraplanning services, compliance as another example, where these are non-revenue generating functions, but important functions to run the business. And so that's another area, Cheryl, that we're investing quite a bit. And really, to sum it all up, it is all about helping the advisors be a hero in front of their clients with additional capabilities and expertise by leveraging the partners like the firms that are represented here today. Cheryl?
Yeah, I know. That's great, Michael. And I think timing right now, right, it's November 13th. Tax planning is well underway for the end of the year. So appreciate that comment. And I do think, too, when you think about how the industry is changing, to your point of going after all these different services and non-revenue generating services, how do we as industry help the industry make sure that that is available
Yep.
and also helps the advisor with whatever they might need from an educational perspective. So excellent, Michael. So next, Dave, if you want to just help answer that same question from your perspective.
Well, these guys answered it so well. I'm not going to have much more to say, but I'm gonna add a little bit on, because they did bring up a number of really good points. One, I think, is just the complication factor has gone way up over the last handful of years. And so when you think about what a wealth manager or advisor delivers now, it's completely different than it was 5 or 10 years ago. And that has to do with a lot of different wealth management activities and services. So one thing that Dimensional has done to react to that is that we spend a lot of time with advisors. We have study groups and training sessions that we do very, very often, and we have a lot of conversations with advisors. And so we always just try to respond to this, what we call the feedback loop. What are we hearing on the ground? What do these advisors need to be able to execute on these plans for these clients of the advisor? And a couple big changes there dimensionally. We've been in the mutual fund business for 43 years. We ended up launching ETFs about a little over 4 years ago. I think we're now the number one largest active ETF manager, about 170 billion over the last 4 years. And that was just a response to this need for customization. So we have funds, we have ETFs. We've just launched a separate account platform that historically was at about a $20 million minimum. Now we dropped it down to 500,000 because of technology and ability to trade smaller and smaller accounts. We've also launched a set of models, a number of models that show up, I think, on both SEI's platform and AssetMark's platform. So the idea here is really just customization and trying to meet the advisor where they need solutions for their clients. The one consistent thing for us has always been we love your investment philosophy. We want you to have that investment philosophy, but we want it in different wrappers, because we've got this complication around wealth management that we need to address. And so that's been kind of one of our, I'd say in the last 4 years, probably our most significant change or kind of innovation over that time period. It's just trying to address all of the vehicle options that the advisor needs to meet some of the complicated needs of the client that both the Michaels mentioned last few minutes. So that's where we're going, and we continue to kind of look for ways to advocate for the advisor in that way. The other area that we really spend a lot of time on, and these guys both nailed it, is just it's all about client time. It's all about prospect time. So, how do we minimize the amount of time that goes into the investment portion? How do we minimize the amount of time that goes into the administrative or tech portion? And I've seen a number of surveys, including our own, where it's something on the order of 40% of an advisor's time is spent on investments and administration or logistics, and that's a problem in itself. So when you look at the highest growth firms that we work with, that we see in our benchmark surveys, those advisors have spent the most time externally with clients, with prospects, doing referrals, working on the client experience, and avoiding the things that can be actually outsourced and done fairly easily and in a more simplified manner by working with partners that have that expertise. So one big shout out for both SCI and AssetMark. I think they both do that very, very well. As I said before, on the asset management side, which what we do is we think we do the asset management better than anybody else, and our whole goal is really to deliver on the investment side. So when we think about planning and wealth, I always think about investment management, and then I think about all the wealth services that come from an advisor. And a lot of those wealth services, obviously, they're getting better and better and developing more capabilities in that front. What I always get concerned about, and from my vantage point, is looking at the investment side and saying, if you're an A+ player in the wealth side, yep, you don't want to be a B- player on the investment side. And so I think I personally have seen sort of a kind of more of a movement to indexing. Indexing is great in certain ways, but again, like I said, Dimensional is kind of built on how do we better an index, how do we beat an index. So we like to try to talk to advisors about that proposal, both the wealth side and the investment side, and how that all comes together to give the best solution for the end client, and do it in the most systematic and most efficient way possible.
I mean, I love that. I think when you think about what you all three of you just said, technology is at the core, right? To make sure that we can streamline, get the work done that we need to get done, help the advisors. You talked about personalization and customization and all the things around tax. I think technology drives that, but very interesting time right now, right? We got to make sure that we're all very focused on what not just today, but what we need to do going into the future. So my next question is going to be directed to start with Michael Kim. So when we talked about supporting the advice and delivery process and some of the pain points, what are the biggest points of friction in your business today that gets in the way of advice delivery or even execution? Think about onboarding, management at scale, data reentry. Data is a big thing, I think, probably for all three of you firms and all of the clients that we talk to. It's all about how do you bring data together in a cohesive way, more real time, less batch, all that. I think that's really important.
Yep.
Product complexity, right? So what are you doing to address these pain points?
Yeah, absolutely. And sure, if I may, before I address the friction point question, just maybe following up on both Dave and Michael's comments, I think one of the big takeaways from this panel session here should be that the clients, what they expect and what they're asking for from their trusted advisors is really their time and expertise on the holistic planning. It's not about whether, I don't know, the advisor bought NVIDIA and sold Microsoft or whatever those trades are. It's about, am I going to be okay? Is my family going to be okay? I mean, as an example, we were just in a workshop earlier today, and if the advisors aren't talking to their clients about the Great Wealth Transfer and really the plan to affect kind of the transfer of wealth from the first generation client to the next generation, that's a big red flag there. So the point is, how do we help, whether it's SEI, AssetMark, or Dimensional, how do we help the advisors really think about kind of the holistic, so the planning aspect, as opposed to the day-to-day portfolio management and the trading aspect of the client's portfolios? But to your question about what are some of the friction points, let me just share a couple thoughts, maybe one on a tactical level, and then maybe a couple of thoughts on the strategic level. So just in terms of kind of the tactical friction points, sure, why is it so hard to open up an investment account? I mean, in this day and age with AI and technology and all of the innovation that we have, my goodness, it just still feels like you're taking out a mortgage every time you open up a investment account or a brokerage account. And so one of the key things that we've invested quite a bit on is this, just really the simplicity, to Dave's point, about just making things simple on new account opening, new account wizard, which is what we call. And so not only is it digital and all that, but if you're opening up new accounts across your whole family, and a typical household has anywhere from 4 to 7 different accounts, let's just make sure that the clients go through the signing ceremony and the data input just once. And if anything, pull the data from CRMs and other technologies so that there is no manual input, and that it's a straight through, easy, just a new account opening process, so that it doesn't feel like the clients are taking out another mortgage or something like that. So that's sort of on a tactical level to address kind of a common friction point. Maybe just sort of zooming out a little bit, when we think about just some of the more strategic, either friction points or maybe sort of barriers to growth and client experiences, number one, and Dave alluded to this, so right now, the whole industry is really evolving and shifting to either sort of SMAs or custom individually managed accounts. And so really the question is how do we help advisors really drive towards personalization, but do it in a scalable way, right? So whether it's a custom SMA, Dave, you alluded to SMA minimums coming down from sort of the $20 million level to maybe $500,000 level. And you and I have had some personal experiences in working with those types of products out there. The technology and the process and the overall industry is there to really help advisors. I know our firm, and certainly Michael Lane's, your firm, we're investing in different UMA technology and platforms to just make that personalization not only easier, but also scalable for the client. And so one of the biggest growth areas for us is really the custom SMA program, and we can do it also in a UMA construct. There's a lot of acronyms there, Cheryl, but this. I mean, you and I, we partnered together on this type of technology to really deliver that personalized experience at scale to the advisors and ultimately to the clients. Last thing I'll mention, just sort of at the strategic level, is a friction point that so many advisors are dealing with, and frankly, it's probably one of the biggest issues in our industry is around succession planning, right? I mean, depending on which studies you look at, about a third of the advisors are going to be retiring
Very good. Now, I think just personally, I'm moving from one advisory firm to another, and just the amount of paperwork and the amount of DocuSigns and the amount of passwords, it's absolutely crazy. So that is a big friction point. I'm feeling it right now. Also, I think you talked about the great wealth transfer, right? We can't forget about that. How do we get ourselves ready for that from an industry perspective, and with the succession planning of advisors that could roll into that, of having teams to make sure that you're talking to every family member at different ages, and also great points there, Michael. So I'll pass this on to Michael Lane, same question.
Yeah, so everything Michael said around the front end, everything you just shared as well, that's something we all know is a major pain point. And so what are we doing about it? So at SEI, we have invested $2 billion now in our wealth platform in order to streamline those types of processes and to go another step further, because I'm a huge believer that we're going to see a massive increase in the amount of SMA adoption, direct indexing adoption. I also believe in the UMA platforms will continue to expand, but then there's one step beyond that I've heard the largest of the advisor firms out in the industry are sort of begging for, that doesn't yet exist in a scaled way. That is where our focus is as well, which is the UMH, which is that unified managed household. So how do you get to the point where everything can be managed in one portfolio and have, say, a tax overlay, to Michael's earlier point, tax overlay the entire output from that portfolio? So that's where we're going. Now, how do you do that in today's world? So there's a couple of things that we're working on in order to accomplish that. One is we have a strategic partnership with Tiffin. And with that partnership, we're going to be looking at ways of using AI to better screen data so that we can help advisors be more productive and more efficient with their clients. Like I said earlier, the relationship itself cannot be AI'd out, but the data that that advisors have on their clients, we have to be able to improve the way that we help them use that data to provide better service, better experience, more targeted communications. And so that's something that we are working alongside Tiffin on to develop that end of our business as well, to remove some of those pain points. Because you brought up the word data, and if you aren't using data, you're in trouble, because there is, you look at every industry out there, you can't pull up anything on an Amazon or anything else without like 20 recommendations of what you should do, because they're using your data and they're processing it through an AI bot, and that is going to make recommendations to you. I think we have to be a little bit more careful and personalized in our industry. We're more highly regulated, but we have to get to that point where we help advisors be more targeted so that they can serve more clients. Because we do have this problem where we have an aging population in our industry. We don't have a supply of new advisors coming in to replace the advisors that are going to be exiting and retiring in the next 5, 10, 15 years. And we may talk about the great wealth transfer. There's a lot of things that we're not talking about when it comes to that, and what are the implications, which I'm happy to share my views on. But we have to make it possible for an advisor to serve more clients. The only way that an advisor of the future is going to be able to serve more clients is to be more efficient. Dave Butler mentioned a point earlier in his opening remarks, and I remember the survey data back, if you look back in the 90s and 2000s, there was lots of data out there that illustrated that advisors that used dimensional grew at a faster rate than advisors that didn't use dimensional. Now, what is one of the core reasons for that? Was dimensional was one of the early movers in helping people understand that you had to have a model allocation. You had to have a very prescriptive and defined process for how you put portfolios together, and it should be consistent. It should be repetitive. Yes, people's needs are different, but it doesn't necessarily mean that you have to have 5,000 different portfolios for clients. And by freeing up, again, that time, Dimensional illustrated years ago that you could actually, by freeing up that time, be more productive and grow faster. So if you take that data point from Dimensional's research years ago and you apply that to some of the other ways of using data, we have to improve that so that those that are using appropriately the information that's available and the information about clients that's available that they have, we should be able to further improve their ability to grow and serve more. And we're going to have to cross that bridge, because if you have fewer advisors but more people needing advice, we're going to have a problem. We have to get more efficient.
Yeah, and to your point, Michael, and Michael, I think data, when you think about all the data that we all sit on, right? We sit on a tremendous amount of data, and how do we turn that data into actionable data and do with it, to your point, automating some of the processes today that are human-led? I think that is the next big thing, and I think Tiffin and others are really focused on that. So appreciate that, Michael. So Dave, same question to you.
Yeah, I think both of them are exactly right. I think as we look at technology, we look at leveraging technology, particularly AI, that's going to be just a matter of making everything more efficient. So it's an efficiency tool more than anything else. And we just mentioned that our separate account dropping from 20 million down to 500,000. That's a classic example of just efficiency allowing us to get to more clients than we did 5 years ago. So that's an important point. I think what we're seeing in the industry too is just this, again, going back to the question that Michael just answered, which was, how do advisors get the chance to be in front of more clients? How do they get to work more thoroughly with clients and prospects than they used to? And I think using technology to do that, I think, is going to be a key. We've talked a lot about diversifying the offering. So when you look at some of the research we've done on our benchmarking surveys, 70% of the advisors have not dropped their fee in the last 2 years. And those that haven't changed their fee, and those who have changed their fee have actually increased it more than decreased it. So, advisors' fees are staying fairly solid, and but they are actually delivering more and more services. And so then that gets back to the efficiency question that Michael just touched on, which is, how do you become more and more efficient to deliver those kinds of services at a broader, bigger scale, and yet you're doing it basically at the same price. So a lot of that then comes into technology. It comes into training. It comes into finding the next generation of employee, developing teams. The teams, the high-performing firms that we work with, have better support teams, and they have higher employee retention, and they have higher client retention. So they're doing a lot of things that the really, really good advisors have found ways to do, and they're doing it via leveraging technology. So that's an important aspect of this as we look forward and we continue to see growth in the advisor space. It has to come from technology as a leveraging tool, but then it all circles back to what we've all talked about: is how do you get in front of the client? How do you communicate a story, an investment philosophy, an approach that's going to be consistent? You always make the comment about, when the person at the front desk at the advisory shop, client walks in the door and they say, tell us about your investment philosophy or investment approach. Everybody in the office has to be able to articulate that. And what we find often is the firms that have a culture and/or an investment philosophy or a voice that actually is well articulated across the entire firm, those firms grow faster. So again, the only way that you can get to that, I think, is being simplistic in your investment approach, simplistic in your wealth management approach, utilizing technology, and Michael's firms both do that very, very well in terms of delivering, the kind of back office solutions that are going to help advisors get out and spend more time with clients. And then again, the important part is you have to be able to articulate what you're doing, what you're offering to the client. Are they gaining some value from your services? And if you're not able to articulate that in a really, really a strong way, then that's a problem as well. So one of the areas that we've actually added on in terms of servicing, we call it Dimensional 360, but it's all the kind of the communication, practice management things that we do with clients. One that I like a lot is called the 4S framework. So the 4 S's stand for stories, scripts, supplements, and let me look at the last one because I always forget, sketches. So we train advisors on those kinds of concepts. So a sketch, is just an easy way to sit down with a client and you're going through a presentation deck. How do you sketch something that's going to make that conversation more impactful? A story obviously is going to be additive to that presentation deck that you're actually trying to make. So we train in those types of things because we think it's really important to be able to communicate a concept and a story in a way that's going to resonate with whatever the client is on the other side of the table. And we always talk about my mom as being the a type of client that we try to figure out how do we communicate and how do we get her to digest the kind of information that we all talk about at a very high level from a finance perspective, but she doesn't really even know exactly what a mutual fund is versus an ETF. So how do you use the stories and sketches and scripts to actually make that come more alive for her and then have her get engaged in the story as well? So again, technology is going to leverage all of these opportunities for us to actually get better at our story and more articulate in terms of the story. And we've seen that firms that actually have grown the most are the ones that actually have the entire firm, all 10 or 20 or 50 or 100 people in the firm can articulate a story of that firm and the offering to the client in a very, very high level.
No, I love that. I think, technology, right, drives everything that we're all talking to. When I think about, Michael Lane, what you were saying about the unified managed household, and then, Michael Kim, around how you're servicing different types of clients, and Dave, you too. Like, I think, one of the things when you think about technology and where we're going and some of the efficiencies that we need to drive around data and AI and all those things. Also, I think about what's coming next. And Michael Lane, you talked about this when you were kicking off, but I think about like not just taking SMAs down to the $500,000 level, but what about alts, right? Like taking alternative investments down, taking like just all the different asset classes, private markets that are out there. I just think this industry is really interesting, and technology is really going to drive a lot of that forward.
And Cheryl, if I may, just along those lines, those days of building a 60-40 balanced portfolio, and that was sort of the reason why clients should work with the advisor, it's gone. And so, at the risk of being a little controversial here, I mean, I think it is really up to the financial advisors to really be well versed in whether it's, the private market investments or the cryptos and the Bitcoins and all that stuff, even though that may not be part of the allocation, but especially when you're talking to the next generation or those investors that have the propensity for those investments, they're looking to the advisor for their point of view and really for education. And so I think it's imperative that the advisors at least have a point of view on those different types of instruments there.
And can get educated on it, right?
Yeah.
And I would agree with Michael. I think everyone, regardless of whether you use them in your practice or not, you have to be versed so that you can communicate about it, because you're going to get asked about it. So I think you have to have that. I do actually worry sometimes, though, that we are in an effort to democratize certain types of investments to every investor out there, that we lose sight of who the appropriate investor is for different types of solutions. So I want to be careful a little bit with that as well. When you think about even some of the advantages of a tax overlay, direct index or SMA portfolio, like there's tremendous advantages for certain types of investors, but it's not the $50,000, $100,000, $200,000 investor. Just from a tax perspective and a tax rate perspective, and how long those tax benefits last in a portfolio when you're actually doing the tax harvesting. So I think that there are things that we have to be really careful and I think helpful to the advisor community as well, which is, we have an alternatives platform that makes it easier for people to access, a wide range of alternative and private equity and private debt and credit investments. It doesn't mean everybody should use it. It doesn't mean that every investor should have that in their portfolio. And so I think we just have to continue to improve that. And when I hear that some, even in the alternative side, you brought up the alternatives word, in the alternative side, that there are firms that are trying to get that down to $25,000 investments. I'm trying to figure out why.
Wow. Yeah. Wow.
Why are you doing that? It's like a ton more labor work for really, like, does that investor need that? And so I think that that's one of our things that we're going to have to spend some time on, is not pushing the envelope so low that we're trying to bring everything down to a $5,000 account that actually there's very little benefit for that $5,000 investor.
Yeah, I agree with that. So we have about 15 minutes left. So I have two more questions. So the next question, we touched on it a bit. So it's around the great wealth transfer, the 80 trillion expected to change hands over the next 20 years. We've been talking about this for quite some time. So what are the demands of human first, digital first experiences based on each generation? They're all different, right? I think, as we know, the different generations, Dave, you talked about your mom, like they're all the different needs of these different generations. So what's your strategy and guidance forward to balance the human tech advice delivery experience? And Dave, I'll start with you.
Well, I'm a bit afraid of the fact that I actually am kind of in my mom's generation now. So when I talk to my kids, it's pretty clear that I'm not part of the newer generation or the second gen. So, but what I do see is I recognize that. So we've got these advisory firms, and this has probably been the biggest theme and phenomenon, as we all know here on the panel. It's about merger and acquisition and succession planning. We've had a lot of advisory firms who've had great success. They've built high growth businesses. They've serviced clients very, very well. They've gotten amazing amounts of referrals, and referrals are always at the top of the list in terms of how do you grow your business. So the good ones have great referral programs. The good ones have formalized referral programs. The question then is, as the business grows, is how do you maintain that business? And I think people always talk about the second generation client that's coming in the door, but I think what Michael mentioned earlier is that you got to worry about the second generation employee and what that person looks like, what that person how they use social media, how they use technology. How are they trained in the story? So I think that part of the story doesn't change. You have to have the same cultural base, regardless of generation. You have to have the same investment philosophy, regardless of generation. But there are different ways that people communicate and different ways that people interact. So I think the goal and the focus of many advisors has been thinking about not only second gen, and I think we have a bit of a problem there. In the sense that when you look at any kind of research, and we do benchmarking surveys on the advisors we work with, and they'll say, yeah, that's the most important thing, second generational wealth transfer, et cetera, et cetera. And then you ask the follow-up question, which is, do you have a formal program to address that, or have you met with a second gen person? It's like 20-30%. So it's clearly a top of the mind topic, but it's clearly something that advisors haven't formally addressed as well as they could and well as they should. So that's another area that I think we spend a lot of time working on and making sure that clients are really thinking through that. How do you educate the second gen? How do you get those second gen clients in the door to actually meet and interact, so that asset doesn't go out the door when there's a change at the estate or family level. So those are really important aspects to it. I think the other follow-up comment I just make is when you think about the referral process and the growth of these businesses, the referrals are really key. And I think whether it's a referral to another friend or colleague, or if just a referral to a family member, it all comes back to the human touch, the experience. I know Michael and we all have advisors, and I've had my same advisors for 28 years. And people often ask me, why do you have an advisor? You're in the wealth management business and the finance business. You know all that stuff, right? And I say, of course I do. But as Michael Kim pointed out, these guys do so much for me and so much more for my family. It really is that noble profession. And I've heard a comment 20 years ago from a London colleague that said, if there's, God forbid there's ever a day I'm not here, for my wife and my 4 kids, there's a phone number and a name and actually a relationship that's already been developed, that I'd be more than happy and more than confident of him and his team taking care of my family for many, many years. So that's a really important relationship, and that's not one that just goes away lightly, or doesn't go away because there's a slight fee change or something like that. So it really comes back to competence. It comes back to their ability to deliver on expectations. And one thing I've noticed with my advisor personally is that he has a younger advisor who's actually come on to multiple calls over the last 2 or 3 years, and has gotten to the point where I still have a relationship with my original advisor, but I spend probably 80% of my time with the younger advisor. Because guess what? I have trust in him because he's a competent person. He's got all the credentials. But then every time I deal with this guy, the trustworthiness factor edges up because he meets the expectation every time I deal with him. So I'm more than happy to work with him. And that just expanded that advisor's business time and his ability to go out and find new clients in a massive way, because he's got a competent second-gen employee. So that second-gen employee, by the way, is actually now interacting with all of my kids on a number of different, like 529 and UTMA type activities that have already developed a relationship. So I think that model is the right one. I think that's the one we really got to think about going forward.
That was great. I really appreciate that. And I think you're right. especially talking to the kids. That's really important. So I'm going to just skip, since we only have a few minutes left, to the last question, which is really the one that everybody should walk away with thinking about. So there's lots of things that are changing fast. I think we talked about a good number of them today. We're all trying to keep up with innovation. If financial advice needs to be supported by your firm, but what's that going to look like in the next 5 to 10 years? What's your firm doing? How are you personally shaping the financial advice delivery experience for your stakeholders? So I think that would be a great way to end this session, with each of you going through that. So Michael, Kim, let's start with you.
Yeah, no, happy to. And I can't believe the hour has already gone by here. Yeah, I mean, there's so many different things that we can share, but let me, since Dave Butler threw out the 4 S's earlier, I'm going to share our own acronym. It's race to the client, RACE. And let me just sort of share what each of the letters mean, and a couple of practical examples of, what advisors can be doing or should be thinking about doing as we sort of think about the next several years. So, RACE stands for relationships. As we've been talking about all afternoon, it's all about relationships and really about the experience of the client. And especially as we think about kind of the multiple generations of clients, making sure that you have the right team structure and maybe the second generation advisor as part of your team to really further and enhance that relationship. A team-based approach is a must-have in terms of how advisors should be engaging with the advisors. And also really get to know, and just like what Dave Butler said, really develop a personal level relationship where, the advisory team is really socializing and connecting both professionally as well as on a personal level. Anything that the advisors can do to really deepen the relationship, I think that's key. The second letter is A, and it really stands for access. And this really goes to sort of the digital aspect as well, making sure that the advisors are accessible to the clients, whether it be not only the mobile devices, that's a given, but social media, it's a must-have, and it's actually a communication tool, not just sort of a platform where you post different things. It's a communication tool, an opportunity for the advisors to really provide updates and really their points of views in terms of what may be happening. The other aspect of access is providing access to different investment opportunities and also different sort of insights. And so we talked earlier about, whether it's private market investments or crypto or Bitcoin or what have you, making sure that even though it may not be part of the allocation, that the advisors can provide access if the clients are asking for it, and certainly have a point of view that they can share. C is for credibility, making sure that the advisors develop a full credibility in this day and age, especially the next generation. They've grown up being highly skeptical, Cheryl. I mean, they've grown up, through social media, and they've been trained not to sort of trust, kind of different sort of content. And so making sure that the advisors really exude a sense of credibility and the trust. If you don't have the credibility, you're not going to be able to develop trust with the clients, especially for that next generation. And so, how does the advisors think about kind of the overall family and the next generations? So many of the new clients and the younger clients are, the Henrys, the high earner, not rich yet type of segment. And so making sure that they have the credibility to connect with those clients. So RAC, and then the last letter E is for education. It is all about education. It is opportunity for advisors to share their point of view on whether it be different investment opportunities, as we've talked about, their perspective on what the next several years are going to look like for the client, or sort of the market environment, opportunity for the advisors to really develop and enhance the trust and the confidence through deep insights and education. So RACE, race to your clients. That's a fun acronym that we use here, and hopefully the folks in the audience can maybe use that. And last thing I'll mention is we have a whole team of business consultants that are ready to support advisors, really implement kind of this race to your client tactics, and we'd love to have those conversations as well. Cheryl?
Excellent. Thank you, Michael. So Michael Lane.
So we started talking about the great wealth transfer, and I'll just talk about that for 1 second because it applies to your question about what's going to look different in the next 5 to 10 years, or what are we doing about that. So when we start talking about great wealth transfer, one of the things I don't hear enough being talked about, and it's a very important point, is that wealth transfer is going to unlock significant assets that have been unmovable because of large embedded capital gains. If you think about what happens with many of these assets, they're going to step up in basis at death. And so when that transfer takes place, you're going to have the ability as the next generation to change that to something else. And what we have to be really careful with is, where's that money going to go? And so I think we have to do an increasingly better job, which is something we're going to be focusing on with a tremendous amount of resources behind, is educating that next generation that's going to be inheriting that money, or it might even be a skip generation that inherits that money, because we don't want them taking what's been a properly designed and an executed portfolio for 20, 30, 40 years and then putting it all in Bitcoin. We don't want to see that type of activity. That's why one of the things I started doing last year with Edelman Media was a series called Hey Dad, where you start to talk to your children about investments. You start to talk to your children about money. What's the goal? What's the purpose? And how do you invest based on that goal and purpose? So I know we're running out of time, so I'll stop there, but we have to make sure that those who are inheriting this money, because there's not going to be a tax implication to sell it due to step up in basis at death, do not just take those well-built portfolios and then realign them in things that aren't as well-built.
I love that. My 30-year-old son, when I asked, what do you guys want for Christmas? We always do lists. He said NVIDIA stock.
Yeah.
That was his wish. All right. So Dave, we're going to end with you here.
Yeah, on our end, I would just narrow in on the investment management part, because that's pretty much what we do. To Michael's point, we have things like we're working on an exchange fund, which allows people to take a low basis stock and put into an exchange fund, which diversifies you over a 7-year period and kind of avoids the capital gains for some period of time. So things like that are happening. But I would also just say, when you again thinking back to the wealth management model, if you will, there's a lot of great things happening on the wealth management side. On the investment management side, my concern in the industry is we've probably have defaulted to some degree over there. We've just said index it because it's low cost, it's diversified, it's tax efficient. All of that stuff is great, but if you can get 10 or 15 or 20 or 50 or 100 basis points over 10, 20, 30, 40 years, that becomes significant wealth, and that compounds at a significant rate. So, what we really built the business on is just that, is trying to be the best in the capital market space. We work on one philosophy. As I mentioned, we have 5 Nobel Prize winners that have been on boards through the years. We have 300 investment professionals, 25 internal PhDs working on this topic at all times. And so you don't want to actually outsource that investment piece and not know that you're actually getting the best execution and the best exposure to the capital markets as possible. So my pitch to all the advisors out there is, don't discount the investment side as we kind of progress to a better and better, more sophisticated wealth management solution. The investment management part is just as big of a component when you look out 10, 20, 30, 40 years, even when it's a small advantage over a classic index fund. So that's what we're working on at all times, and I think that's been something that the advisors have appreciated from Dimensional over the years.
So it's hard to believe we're out of time, as Michael Kim said. So that was really fun. That was really engaging. I really want to thank the panelists here. You guys contributed so much to the shared community as headline sponsors of AdviceTech.LIVE. Be sure to follow these leaders on social media. Check out their virtual booths to stay engaged. Coming up next is FinTech Speed Demo Group D. I encourage you to join Allison Susko for the next session. It's a great time to grab a bio break, coffee, or stretch and join the next session. Thank you, everybody, for your time. That was truly enjoyable. Thank you, guys. That was great. That was fun. Yeah. Bye-bye.